Hello, good afternoon. It's Adil Fazal here, market analyst at CFDs.com. Be sure to visit the specialists for betting and CFD brokerage and at www.cfds.com and certainly qualify for the potential cash bonus offer that's available. Alternatively, you can visit the educational site www.cfds.education to certainly learn more. Okay, this is a market wrap-up, or shall we say mid-afternoon, midday market wrap-up of European indices and as to where they are currently positioned. Okay, so the early morning rally certainly has faded due to Monte, Paschi, i.e. the banking sector certainly under immense strain and pressure. You can see that with the DAX banking sector or the German banking sector. We're back at those lows. So it certainly seems to have evaporated the actual initial strength. Okay, now in terms of the actual market itself, the Asian market certainly finished weak. That's certainly something of note. Now we had the Shanghai down 2.85%. The Hang Seng was actually up, whilst the Nikkei was down 0.7%. Now the Shanghai certainly is at its 200 MA on the weekly chart. The daily chart of the bottoming tail certainly has failed to play out and hold. Now we are back at or approaching the 200 MA potential support zone on the actual Shanghai index itself. Now this morning's rally was very impressive on the back of Facebook. And we had strong earnings from Facebook. We've had stronger data out of the UK as well. The GDP certainly came in line. We did have CBI data thereafter. Let me just confirm. Actually came in slightly weaker. Actually came in at 16 rather than 18. And we did have EU data actually come out weaker as well. So that's certainly some food, certainly something to take into consideration as well. So given the fact that the Shanghai is now at its 200 MA, we are looking for a potential bounce. And also given the fact that US markets certainly did bounce from their lows overnight. So that certainly is a factor to take into consideration as well. Now, in terms of economic data itself, we have had the inflation data certainly come out in line. Unemployment slightly better in Spain, although the retail sales certainly missed the mark. The UK GDP came in line. Consumer confidence in the Eurozone more or less flat. Services slightly weaker. Industrial slightly weaker. Business claims slightly weaker. Economic sentiment slightly weaker. So overall net European data was more or less towards the negative side. CBI distributed trade survey, the UK certainly weaker as well. CPI came in slightly weaker. Harmonized index of CPI year on year 0.4. Month on month came in line. Certainly is supporting the thesis that you are going to get more QE from Mr. Draghi, and that should be the central bank put that should keep this market alive. Initial jobless claims, continuous jobless claims. The jobless claims came out slightly weaker, so basically came out stronger, lower than expected, certainly bullish. Continuous jobless claims came out slightly stronger, or we shouldn't say stronger, but certainly came out higher, so again that's relatively negative. Durable goods and data certainly came out very weak. Durable goods orders so far certainly come out very, very weak, and that's what sent the markets low to a large extent. We have pending home sales due to come out shortly, and the Kansas Fed manufacturing activity. And then it's over to the Japanese markets to see how the CPI, etc., inflation data performs there overnight. Okay, so certainly a bump on the actual Kiwi as well, given the fact that we had weaker durable goods data, and the Kiwi certainly did get a little small mini spike. Okay, so all eyes basically means, given the fact that the FOMC certainly was, I mean, still trying to decide whether or not they were hawkish or they were dovish. I mean, more or less neutral, I'd say. I mean, having had read the reports, but given the fact that they did take into consideration international concerns and the headwinds from China, then one must err on the side of the dovish camp. But it's how the markets react, and the markets certainly reacted negatively, so it's going to be hard to read. Usually it takes a day or two for the real reaction to come out, as opposed to the positioning. So we shall see how the markets trade today. Now, let's see where the European markets are set, and we shall take it from there. Okay, so from a technical perspective, given the fact that we've certainly factored in the bearish news now in terms of the weaker EU data, okay, and certainly Asian markets lower overnight. So The daily chart, as you can see here, inverted, basically a bearish engulfing candle. Now there certainly seems to be an inverted head and shoulders being formed here now. This is quite interesting. So you have the left shoulder obviously formed. You are now looking at potential right shoulder being formed, consolidation, and obviously looking to move higher. So again, that's something that's quite interesting from my perspective. So all eyes on there. We have yet to close the gap at the 3070 region, so again certainly keep that on your radar as well. The 60-minute chart, obviously we have this inverted head and shoulders formation, the target being 3115, which we still have failed to hit. We obviously held the resistance zone here at the 3045 region, and the market has subsequently fallen. Now the pivot high from 3050 down to 2980 has certainly factored in all the bearish news, and therefore one would argue that you are looking for further upside. So certainly keep that into consideration as well when assessing. Okay, so again, I think that is very, very important as well. Okay, so the Euro stock certainly is coming into potential support. Going over to a 10-minute chart, you certainly seem to be putting in a potential intraday double bottom. So therefore bias will be on the bullish side. Okay, so you are looking for a thrust higher from my perspective. Okay, so the markets at present is redrawing my trend lines. Let's just observe this again. Okie dokie, right, so you had a mini H&S formation, which obviously has played out so far as well. That certainly is out of the equation. You had a symmetrical wedge type formation that broke out to the downside. That certainly has played out for now. You've got a double bottom and you are looking for a thrust higher up to the 3010 region, if I'm correct. So look for potential resistance at 3010, and the banking sector, obviously due to Monte Paschi being limit down, etc., is causing the risk aversion trade. Okay, so looking for a potential bounce on your stocks and the intraday double bottom to hold. Okay, now bringing up the German DAX. Okay, so again, it's a bearish day. We still have yet to close the gap at 9950, let alone the gaps above. Okay, 60-minute chart certainly is a case for an inverted head and shoulders, but again, that's premature and hypothetical. For now, you certainly are into a potential support zone on the 60-minute chart of the German DAX, so all eyes on there. 10-minute chart, intraday double bottom being formed. Again, you have horizontal support, so that support zone certainly has held. Okay, so support certainly holding for now. Okay, now going over to the French CAC, again, you are looking at potential intraday double bottom, and you have horizontal support in this zone as well. Okay, 4320 zone. So all eyes on that 4320 zone, and we'll see how the markets react. Going over to the 60-minute chart, obviously we held the 200 MA at 4400. We closed the gap as well, and therefore it was a risk-off scenario, and you're looking at a potential reversal, and that's exactly what we've got so far. Okay, now looking at the daily chart of the French CAC itself, the daily chart, we are into that upper channel resistance, hence the reason why we've obviously been weak today, and there is a further scope of the market falling even lower. So certainly need to keep a keen eye on the European indices as to whether or not we can break higher. Moving over to the FTSE 100 now, going over to the daily chart, we certainly are held at resistance, our key resistance at 6010, well thus far. Going up to the 60-minute chart, we've held the retest of the IHS neckline, so again that support at 5920 remains solid. And that's supported obviously with regards to, or due to talks of Russia potentially cutting its oil supply, and obviously that will help prices, and therefore FTSE is getting a lift. Also, we've had stronger earnings out this morning, and well, stronger news flow out from Antofagasta, and there was another organization, if I can recollect correctly, Anglo American and KAZ. CAS Minerals jumped 16%, Anglo American up 10%. So the mining sector certainly is helping as well, and also the oil sector to a large extent. So the commodities certainly helping lift the FTSE 100, but again that resistance at 6010 remains, and we are now retesting the neckline. So all eyes on this neckline at 6010 for a potential thrust or a bounce higher. Okay, right. Even though we've discussed the indices, the real chart that everybody should be focusing on is the Euro USD from my perspective. I mean, it's all about the resistance at 1.0920. If you can hold the resistance at 1.0920 region, then you are looking at a potential risk-off scenario. So a potential double top, which has obviously held us far, even though we've slightly had a fake out above. But a risk, basically a resistance zone here, which I've explained at 1.0930, 1.0920 region. If that holds, then you will see equity prices moving higher. So certainly keep an eye on the Euro USD. Okay, now the banking sector, like I said, is a weakness this morning. We are now back into that support zone for the banking sector, and that should help stabilize the concerns there. Again, retail sector for the German DAX certainly is in support. Again, should help force the market or potentially push the market higher. Now we have the Aussie and Kiwi certainly coming into resistance as well, so that's certainly something to take into consideration as opposed to the next potential move in this market. Okay, so I think that's a market wrap now. The Chinese markets, or fears from China, fears from Monte, Paschi, banking sector certainly all seem to be baked into the cake now, and we are looking for a potential thrust higher based on the FTSE in retesting the neckline. Okay, be sure to visit cfds.com for your trading needs. Goodbye now.